So today we're going to take a look at the pound, and I'm going to give you guys an update on the chart that we looked at on Friday and that potential fake out above 127.20. Okay, so looking here at the pound daily time frame. If you guys saw Friday's video, you know about this key level up here. So we've got this high. This was a minor swing high. This obviously was a more significant swing high for the pound. And so you can see that this level developed through here. And what we had happen was Thursday closed above and Friday closed right back below. So this close on Friday confirmed this up here as a fake out above that level. Now you can also see where GBP also tested the key resistance level just above that, right around 127.94. So you can see this pivot off of the closing price back here. We've got the highs through this area and also this high, and that was tagged here last week. Okay, now obviously you can see that so far, right, based on that idea, we had the close below on Friday. Monday kind of spent time just consolidating here, dropped a little bit. But then on Monday, we did get a retest of this area. And you can see where the pound tried to close back above, but didn't quite make it. So this is why I often say that these are areas, not exact levels in the market, because you can see where the pound didn't close back above that area. And so far today, we are getting some follow through to the downside. So today we're going to talk about, where this market could be going, what would invalidate this, and also what we need to see from the DXY to send the pound lower. But before we do that, I do want to ask a favor of you guys. A lot of you guys I know watch almost all of these videos, and I also know that a lot of people are not subscribed to this channel. So if you guys find these videos helpful, please do subscribe and also hit that bell icon for notifications. And don't forget to give this video a like. I would love to get this channel up to, we're right around like 54,400 right now. I'd love to get this channel up to like 55,000 just after the new year. That would be awesome. So I really appreciate you guys for watching these videos throughout the year. They do take some time to make, so I would really, really appreciate if you find them useful to please like the video and subscribe to the channel. Okay, so let's go ahead now and take a look at what would invalidate this first. Let's discuss that because managing risk is priority number one, right? So what would invalidate this is quite simple. Right now, this level up here, this area up here, is going to be the one that bears have to hold on to. If we see the pound start to close up here in this region, even if it stays below these highs but closes above that 127.30 area, let's say, then that would start to invalidate this up here as a fake out. Okay, so any close back up here would invalidate the idea, especially if we were to see the market close above this pivot, okay, this resistance up here, right around 127.94. So that would invalidate it, very simple, right? Now, as far as follow through here for the pound, this is where it gets a little bit tricky because, obviously we have the recent lows here serving as support, but that's a minor area. What is more significant for the pound is going to be this level, which is quite a bit lower down here, right around 125.50. So you can see that this is a pivot here for this market as well. And one reason why I'm focused on this pair right now is because you can see how clean each of these levels has been for this pair, right? This is a minor level down here, but we've got the range lows down here. You can see how well defined all of these are. So this makes trading a market like this a lot easier. Okay, it's never easy to trade, but it makes it easier when you can identify levels that are this clean. Okay, so it goes without saying that we have to see the pound get below here if you're looking for the short idea down here toward levels like 124, which is kind of the mid-range right now within this broader range. So if you're looking for a move lower, this is the level to get below. We need a sustained break below that to open up the 124 area. Same thing down here, 124, we'd have to get a sustained break below that to open up this minor swing low down here. Okay, so that's pretty straightforward, right? But the one issue with that is that you're waiting, potentially a very long time for the market to get down here, not only get down here, but then also eventually close below it, right? And by that time, you've missed out on all of this, and you're also, in a sense, you're kind of shorting the market low. So one thing to watch, and this is what I mentioned yesterday in the Euro USD video, is the DXY. Okay, now the dollar index is a lot cleaner, in my opinion, especially these immediate levels, than what we have developing on the euro and even the pound to some degree. I think that the pound levels, these levels that we discussed, these are a lot cleaner than anything on the DXY. However, short term, I do think that this range for the DXY. Okay, this is the DXY daily time frame. This right here is very, very clean. And this is cleaner than anything that we're seeing on the euro and the pound. So this is why a lot of people say, why do you pay attention to the DXY when it essentially moves inversely to the euro and the pound? You're making your life harder. And I would disagree completely, because I think that paying attention to the DXY can give you a different perspective when you're trading the euro or the pound. Okay, so for the DXY, what is going to send the pound lower if we do get a more significant pullback from GBP is going to be a reclaim up here at 102.60. We need to see a daily close, at least one daily close, preferably two, up here in this area in order to flip 102.60 back to support and expose that yearly open at right around 103.50, and then potentially these highs up around 104.20. So we have to get the market closing back up here above 102.60. It's really that simple. As long as the market is below 102.60, this right here is resistance and 102 is support. Now, alternatively, if we get the market, the DXY closing below this 101.90 area, then we are likely looking at the pound moving higher, because again, these two are inversely correlated. Okay, so if the DXY breaks support, then we could be looking at something like this for the pound where we invalidate this short idea. And alternatively, again, if we see the DXY reclaim 102.60 resistance, then we are probably looking at the pound moving down here toward this level and potentially giving us another leg lower toward that 124 area. Okay, so this is kind of how you can use these two in tandem with one another. This is how I do it to confirm or negate certain ideas. Okay, now there might be some skeptics too about the DXY, using the DXY to trade the pound, because when you look at the DXY weighting, the euro is about a 57% weighting in the DXY, while the pound is only 12%, right? So there's not much weighting there for the pound. I mean, even the dollar yen is higher than the pound when it comes to DXY weighting. But the one thing I would say to that, though, is that the two are very, very correlated. Okay, and for that, let's look at this chart here. This shows an inverse GBP. So I've inverted GBPUSD, which is in blue. Okay, so this level right here, right? The blue level is inverted GBPUSD. The orange is the DXY, right? Not inverted. So what you'll notice is that they move together. And because GBPUSD is inverted here, what it means is that these two move inversely to one another. And there is absolutely no question, guys, that they are very, very related. Okay, so when you look at the DXY, right, again, if we get a break above 102.60, that's likely to send the pound lower. A break below 102 is likely to send the pound higher. So this is going to matter if you are trading GBP. All right, so let's go and wrap up here with the GBP chart. And once again, guys, I really appreciate it if you would subscribe to the channel. I'd love to get it up to like 55,000 within the next couple of weeks. Okay, so looking at GBP, what this is going to come down to, I like the short idea while we're below 127.20. And by the way, I did mention to VIP members last week, actually I entered before the weekend, where I was shorting the market through here, right? Shorting through here, stop above the recent high, and my targets marked out. So that was announced in real time to VIP members. If you guys do want to join, see the link at the top of this video. You can get 70% off lifetime access right now to exclusive charts. You'll see my trades in real time, daily videos, and also the upcoming course that teaches this exact strategy that I'm showing you today. All right, so for the pound, guys, like I said, as long as we're below this area, I do favor shorts. If we were to get a daily close up here in this area, especially above that recent high, then that, of course, would be bullish. If the DXY can reclaim 102.60 resistance and the pound can start trading below here on a daily closing basis, then I do think we're getting that next leg lower toward levels like this mid-range around 124. All right, so that's it for today's video. I know it was a lot to cover, but I hope you found it helpful. If you did, be sure to subscribe to the channel, click the bell icon for notifications, and smash that like button. And also see the link in the description of this video for 70% off lifetime access to our VIP trading group. Trade well this week, and I will talk to you again tomorrow.